Imagine two rooms. The first room is the floor of the New York Stock Exchange in the throes of a market panic. It is a sensory inferno, a cacophony of shouting, ringing bells, and frantic footsteps. Screens flash violent red, numbers plummeting in a cascade of digital failure. Men and women in expensive suits are gesticulating wildly, their faces contorted with a mixture of fear and adrenaline. Information is everywhere, a tidal wave of data points, news alerts, and expert commentary, yet there is no understanding. There is only reaction, action. The desperate, primal urge to do something, anything, to stop the bleeding. This is the world's image of high-stakes finance. A world of speed, of instantaneous decisions, of relentless, caffeinated activity. It is a world built on the implicit belief that to win, you must be faster, busier, and more connected than everyone else. This is the grand deception. Now, imagine the second room. It is a quiet, modest office in Omaha, Nebraska. There are no flashing screens. There are no ringing phones. There is no team of analysts shouting updates. The desk is uncluttered. On it sits a stack of books, annual reports, and perhaps a copy of a newspaper. For hours, the room is silent, save for the rustle of a turning page. The man in this room, Warren Buffett, is arguably the most successful capital allocator in human history, yet his primary activity would, to the inhabitants of the first room, look like profound, almost irresponsible, inactivity. His calendar is a wasteland of empty space. His days are not filled with meetings or conference calls, but with long, uninterrupted stretches of reading and thinking. What the first room calls work, this man calls a distraction. What the first room calls a crisis, this man calls an opportunity. The disconnect between these two rooms is not a matter of style or preference. It is a fundamental schism in the understanding of how wealth and, more importantly, how wisdom is created. The first room operates on a flawed mental model, a piece of cognitive programming so deeply embedded in our evolutionary hardware that it governs the behavior of 99.9% of ambitious individuals. It is a bias that whispers and often screams that action is always superior to inaction, that doing something is always better than doing nothing. This is the action bias, and it is the single most effective destroyer of capital, careers, and potential on the planet. The second room, Buffett's room, is a fortress. It is a meticulously designed cognitive environment, engineered with one primary purpose: to neutralize the action bias. The silence, the books, the empty calendar, these are not signs of laziness or disengagement. They are weapons. They are the components of a sophisticated system designed to starve the reactive primal brain and feed the deliberate, analytical mind. The world looks at Warren Buffett and sees an investor. This is the first and most critical error in understanding his genius. He is not an investor. He is a learning machine. His entire life, his schedule, his mental habits have been architected to optimize for one thing and one thing only: the acquisition and synthesis of high-fidelity knowledge to build a more accurate model of reality than anyone else. His fortune is not the result of a few brilliant stock picks. It is the inevitable byproduct of this cognitive engine. It is the output of a process that values quiet contemplation over frenetic activity, deep understanding over broad awareness, and the brutal discipline of strategic inaction over the seductive allure of constant motion. This is not a story about how to invest like Warren Buffett. This is a deconstruction of the operating system that allows him to think like Warren Buffett. We are going to dismantle the components of this learning machine. We will explore the cognitive infrastructure behind his famous 500 pages a day rule, a rule that is not about speed, but about volume and the compounding of knowledge. We will deconstruct the powerful mental filters he uses to separate signal from the deafening noise of the modern world. And we will uncover the profound, counterintuitive power of what the outside world sees as boredom, the unstructured, quiet time that is the true crucible of insight. This is the blueprint for a billion-dollar mind, a mind that does not seek to outwork the competition, but to outthink it. A mind that understands that the greatest battles are not won on the trading floor, but in the quiet library of one's own intellect. Welcome to the second room. Let us begin the deconstruction. Part 1. The Primal Glitch, Deconstructing the Tyranny of Action. To truly grasp the revolutionary nature of Buffett's cognitive operating system, we must first diagnose the default system he has so painstakingly worked to replace. Human beings are not born to be rational investors. We are not wired for the modern financial world. Our brains are ancient survival machines, honed over millennia on the African savanna, where the rules of the game were starkly different. On the savanna, the cost of inaction was often immediate and fatal. If you saw a rustle in the grass, was it the wind or a predator? The hominid who paused to collect more data, who weighed the probabilities and sought a margin of safety, was eaten. The one who reacted instantly, who threw a spear, who fled, survived. The genes of the jumpy, the reactive, the action-oriented were passed down. Our DNA is encoded with a simple, powerful command: when in doubt, do something. This is the action bias. It is the deep-seated neurological preference for action over inaction, often in the absence of any rational justification that action will lead to a better outcome. Psychologists Daniel Kahneman and Amos Tversky, the godfathers of behavioral economics, illuminated this and dozens of other cognitive biases that demonstrate how our minds systematically deviate from pure rationality. The action bias is one of the most pervasive. We see it everywhere. A soccer goalkeeper, during a penalty kick, will almost always dive to the left or right. Statistically, however, they would save more goals if they simply stood still in the center, as a significant percentage of kicks are aimed there. So why do they dive? Because the agony of conceding a goal after doing nothing feels far worse than conceding a goal after a valiant, albeit failed, effort. The action, even if suboptimal, provides a psychological balm. It feels like control. In the corporate world, managers who initiate more projects, call more meetings, and send more emails are often perceived as more productive and effective, even if those activities generate no real value. The appearance of action is mistaken for progress. The quiet executive who spends a week thinking before making a single critical decision may be seen as slow or indecisive, yet their contribution might be 1,000 times more valuable. This bias is not just a psychological quirk. In the world of finance, it is a catastrophic flaw. The market is a system perfectly designed to exploit the action bias. It provides a constant stream of stimuli, price fluctuations, breaking news, analyst upgrades and downgrades, and the endless chatter of financial media. Each of these inputs is a rustle in the grass, triggering our primal instinct to react, buy, sell, do something. The entire industry is built on this premise. Brokerage firms don't make money when you sit still and let your assets compound. They make money on commissions, on trades, on activity. Financial news networks don't get ratings by telling you to turn off the television and read a book. They get ratings by manufacturing a sense of urgency, by framing every minor market gyration as a pivotal moment requiring your immediate attention. They are, in essence, weaponizing your own cognitive biases against you. The average investor, therefore, is at a profound psychological disadvantage. They enter an arena designed to provoke their worst instincts, armed only with a brain that is hardwired to comply. They trade too often, chasing performance and reacting to noise, eroding their returns with transaction costs and poor timing. They mistake activity for achievement. They are the inhabitants of that first room, caught in a perpetual cycle of stimulus and response, a game they are neurologically destined to lose. Warren Buffett's great insight was not in discovering a new investment formula, but in recognizing this fundamental flaw in his own and others: cognitive hardware. He understood that the path to superior returns did not lie in making more brilliant decisions but in systematically avoiding stupid ones. And the most common form of stupidity in investing is the unnecessary action driven by emotion and instinct. His entire operational philosophy is a testament to this understanding. Consider his famous quote: "The stock market is a no-called strike game. You don't have to swing at everything. You can wait for your pitch." This is a powerful metaphor, but its psychological depth is often overlooked. In baseball, a batter who doesn't swing at a pitch in the strike zone gets a strike called against them. They are penalized for inaction. This forces them to be active, to swing at pitches that are suboptimal. Buffett recognized that investing is not baseball. There are no called strikes. You can stand at the plate and watch thousands of pitches investment opportunities go by. You can watch them fly past, day after day, year after year, with absolutely no penalty. The market can scream, the pundits can yell, your own internal voice can urge you to swing, but you don't have to. You can wait, patiently, for that one perfect pitch, that one opportunity you understand with near-perfect clarity. And only then do you swing with everything you've got. This is not a passive strategy. It is an actively disciplined one. It requires immense psychological fortitude to stand still while the crowd is in a frenzy. It requires a deep-seated confidence in your own process and a complete disregard for the opinions of others. This philosophy is manifested in the physical reality of his life. The empty calendar is a deliberate choice. He famously told Bill Gates, who had his schedule planned down to the minute, that you've got to keep control of your time, and you can't unless you say no. You can't let people set your agenda. Every meeting, every phone call, every distraction is a potential trigger for the action bias. It is an input that demands a response, a pitch you are being pressured to swing at. By ruthlessly eliminating these inputs, Buffett creates a cognitive vacuum, a space free from the tyranny of external stimuli. This vacuum is not empty. It is filled with the highest value activity an investor can perform: thinking. He has engineered his environment to short-circuit the stimulus-response loop that traps most people. Without the constant influx of noise, the primal urge to act begins to quiet down. The rational, analytical mind is given the time and space it needs to operate. He has, in effect, created an artificial savanna where there is no rustling in the grass, allowing him to calmly observe the entire ecosystem without being forced into a fight-or-flight response. This concept of productive laziness is so alien to our modern culture of hustle and productivity hacking that it seems almost heretical. We are taught to optimize every minute, to fill every gap in our schedule, to equate busyness with importance. Buffett's system inverts this logic entirely. He operates on the principle that the vast majority of actions are a waste of time and energy, and many are actively harmful. The real breakthroughs, the truly transformative insights, do not come from a flurry of activity. They come from long, uninterrupted periods of deep thought and study. This is the foundation upon which his learning machine is built. He had to first clear the ground. He had to build the fortress walls to keep the noise of the world at bay. Only then could he begin the real work. The work of building a mind so well versed in the fundamental realities of business and human nature that the right course of action, when it finally presented itself, would be not just a good idea, but screamingly obvious. The deconstruction of the action bias is the necessary first step. You must see the cage before you can hope to escape it. You must understand that your own mind, your own instincts, are working against you in the domain of investing. The desire to constantly check the market, the urge to do something after a big price move, the feeling that you are falling behind if you are not constantly trading, these are not strategic impulses. They are primal glitches. They are the echoes of the savannah, and they have no place in a world of compound interest. Buffett's genius was to declare war on this part of himself. He built a system not to enhance his natural abilities, but to constrain his natural weaknesses. The quiet room in Omaha is his battlefield, and the enemy he fights every day is the oldest and most formidable one of all, human nature itself. By understanding this, we can begin to appreciate the true purpose of the books, the reading, and the thinking. They are not passive acts of information gathering. They are the active process of forging the mental armor required to win this internal war. They are the tools for rewiring the brain, for overwriting the flawed primal code with a new, more rational operating system. And the core of that new operating system, the central processing unit of the entire Buffett machine, is the relentless, disciplined, and lifelong habit of reading. Part 2. The cognitive infrastructure, forging the learning machine. The statement is now legendary. When asked about the key to his success, Warren Buffett gestured to a stack of reports and books and said, "Read 500 pages like this every day. That's how knowledge works. It builds up, like compound interest. All of you can do it, but I guarantee not many of you will do it." This quote is the Rosetta Stone for understanding the Buffett operating system. It is also one of the most profoundly misunderstood pieces of advice in modern business. Most people hear 500 pages a day and immediately focus on the mechanics. They think about speed reading techniques, about time management hacks, about how to physically consume that much text. This is a superficial interpretation. It is like looking at a world-class athlete's training regimen and focusing only on the number of repetitions they perform, without understanding the underlying principles of physiology, nutrition, and recovery. The 500-page mandate is not about speed. It is a philosophy. It is a declaration of what matters most. It is the physical manifestation of a belief that the highest yield activity in any knowledge-based field is the systematic and voluminous intake of high-quality information. To deconstruct this, we must break it down into 3 critical components: the compounding of knowledge, the filtration system, and the active consumption engine. First, the compounding of knowledge. Buffett's choice of analogy, compound interest, is deliberate and brilliant. It is the concept that underpins his entire financial empire, and he correctly identifies it as the governing dynamic of intellectual growth as well. Financial compound interest works by earning returns not just on the initial principal, but on the accumulated interest. The growth is exponential. A small sum, given enough time, can grow into a fortune. Knowledge works in precisely the same way. The first few hundred pages you read on a new subject are like your initial principle. You gain some basic facts, some foundational concepts. But the real magic happens as you continue. The new information you acquire doesn't just add to your knowledge base, it connects with and multiplies the value of what you already know. An idea from a biography might suddenly illuminate a concept from an economics textbook. A lesson from a history book might provide a new framework for understanding a company's annual report. Each new piece of data is not an isolated fact, it is a new node in a growing network of understanding. The more nodes you have, the more potential connections you can make. This is why the volume is so critical. A person who reads 10 books a year is adding knowledge linearly. A person who reads 500 pages a day, the equivalent of a book or more, is not just 50 times more knowledgeable. Their understanding is growing at an exponential rate because the number of potential connections between ideas is exploding. They are building what Buffett's partner, Charlie Munger, famously calls a latticework of mental models. They are not just learning facts about a single discipline. They are internalizing the fundamental principles from a wide range of fields, psychology, physics, biology, history, mathematics, and weaving them together into a cohesive tool for thinking about the world. This latticework is the ultimate cognitive moat. When Buffett analyzes a business, he is not just looking at the balance sheet. He is applying models from psychology to judge the character of the management. He is using principles from engineering to assess the durability of a company's competitive advantage. He is drawing on historical parallels to understand the long-term industry dynamics. His informational advantage is not that he has access to secret data. It is that he has a more robust and interconnected framework for interpreting the publicly available data. This intellectual compounding takes time. It is a slow, patient process. There are no shortcuts. This is why he guarantees that not many people will do it. It requires a deferral of gratification. The first year of reading 500 pages a day might not yield a dramatically visible result. It is the slow, silent accumulation of intellectual capital. But over 5, 10, or 50 years, the gap between the person who engages in this practice and the person who doesn't becomes an unbridgeable chasm. One has built a skyscraper of understanding, while the other is still laying the foundation. This brings us to the second component, the filtration system. If your brain is a cognitive engine, then the information you consume is its fuel. Putting low-grade fuel into a high-performance engine will, at best, lead to suboptimal performance and, at worst, cause catastrophic failure. Buffett is as ruthless about what he doesn't read as he is disciplined about what he does read. His information diet is the intellectual equivalent of an elite athlete's nutritional plan. He has identified the information sources with the highest signal-to-noise ratio and has systematically eliminated everything else. What does he consume? He famously devours annual reports, the 10 kilosecond and 10 Qs that publicly traded companies are required to file. These documents are dense, often dry, and ignored by the vast majority of investors. But to Buffett, they are gold. They are the direct, unfiltered communication from a company's management to its owners. They contain the raw data of the business, the numbers, the strategies, the challenges. He is not interested in a journalist's summary or an analyst's opinion. He wants to go directly to the source. He reads trade journals of specific industries he is interested in. If he is studying the insurance industry, he reads insurance trade publications. He wants to understand the world from the perspective of the people who are actually operating within it. He wants to learn the language, the key metrics, the competitive dynamics that don't make it into the mainstream press. He reads books, particularly biographies and history. Biographies allow him to understand the psychology of great leaders and the patterns of success and failure in business. History provides the long-term context that is essential for his investment horizon. He wants to understand how industries evolve, how competitive advantages are won and lost over decades, not just quarters. Now consider what he explicitly ignores. He pays almost no attention to the daily chatter of the stock market. He is not watching financial news channels. He is not reading the moment-to-moment commentary of market gurus. He is not interested in macroeconomic forecasts or predictions about what the Federal Reserve will do next. He considers all of this to be noise. It is low-quality information designed to trigger emotional responses and provoke action. It is the fuel of the first room, the fuel of the action bias. His filtration system is built on a simple principle: prioritize timeless knowledge over timely information. The details of a company's balance sheet from 5 years ago are still relevant to understanding its trajectory. The psychological lessons from a biography of a 19th-century industrialist are timeless. The principles of supply and demand are eternal. In contrast, the market's closing price from yesterday is largely irrelevant noise. A pundit's prediction for the next quarter is disposable speculation. By focusing on the former and ignoring the latter, he ensures that the fuel going into his cognitive engine is of the absolute highest purity. This filtration is not a passive preference. It is an active, ongoing battle against the entropy of the information age. We are all bombarded with an infinite stream of low-quality information. Buffett's discipline lies in his ability to say no 1,000 times a day. No to the news alert. No to the trending topic. No to the speculative article. Each no is an act of cognitive preservation, a defense of his most valuable asset: his attention. This leads to the third and most crucial component: the active consumption engine. Reading 500 pages a day is useless if the information is not processed, synthesized, and integrated. Passive consumption, letting the words wash over you, builds a library of trivia in your head, not a latticework of wisdom. Buffett's reading is a dynamic, aggressive act of intellectual interrogation. He employs several key mental models during the consumption process. The first is the inversion filter, popularized by Charlie Munger. The principle of inversion dictates that you should often think about a problem backward. Instead of asking, "How can I succeed?" you should ask, "How can I fail?" Buffett applies this constantly in his reading. When he reads an annual report, he is not just looking for the company's strengths, he is actively hunting for its weaknesses. What could kill this business? What are the failure modes? What are the key risks that management is downplaying? He is reading to understand what to avoid. This is a far more robust way of thinking. There are many ways to succeed. and they are often complex and situational. But the paths to failure are often fewer, more obvious, and more universal. By identifying and avoiding the paths to ruin, you are often left with the path to success. The second is the latticework integrator. As Buffett reads, he is not just storing information in isolated mental silos. He is constantly running a background process, asking, how does this connect to what I already know? He is looking for patterns, for analogies, for contradictions. If he reads about a new business model, he immediately compares it to other models he has studied. He might ask, is this like the razor and blade model Gillette used? Or is it more like the network effects model of a credit card company? What are the second and third order consequences of this strategy? Based on what I've seen happen in other industries, this is the act of weaving the new thread of information into the existing latticework. It is a process of synthesis, not just collection. It is what transforms information, which is fragmented, into knowledge, which is structured. The third model is the circle of competence sieve. This is another one of Buffett's foundational principles. He is ruthless about staying within the boundaries of what he understands. As he reads, he is constantly filtering information through this sieve. If the material is about a business or industry he doesn't understand and has no hope of understanding, say, a complex biotechnology company or a cutting-edge software firm, he simply discards it. He famously has a too-hard pile on his desk. This is not a sign of intellectual laziness. It is the pinnacle of intellectual discipline. He knows that his time and mental energy are finite resources. He chooses to allocate those resources only to areas where he can gain a genuine, sustainable informational edge. Trying to be an expert in everything is a surefire path to mediocrity. Buffett's approach is to define a small area of the informational universe and to know that area better than almost anyone else in the world. This three-part cognitive infrastructure, compounding knowledge, the filtration system, and the active consumption engine, is the heart of the Buffett learning machine. It is a system built for the long term. It is a system that prioritizes understanding over speed, signal over noise, and discipline over raw intelligence. It is a system that explains why he can spend the majority of his life in a quiet room in Omaha and still outperform the hyperactive geniuses on Wall Street. He is not playing the same game. While they are playing checkers, a game of rapid moves and reactions, he is playing chess, a game of deep, patient calculation. The 500 pages are his daily practice, his training, his preparation. They are the process of slowly, methodically, and relentlessly building a mind that can see the whole board. Part 3. The synthesis engine. From information to insight. The acquisition of high-quality information is merely the first stage. Raw material, no matter how pure, is useless until it is forged into something strong and practical. The most powerful computer in the world is just a box of silicon and metal, without a central processing unit to make sense of the data it receives. For Warren Buffett, the CPU is not a piece of hardware, but a carefully cultivated state of being, a mind given the time, space, and psychological tools to synthesize vast quantities of information into profound, actionable insight. This synthesis engine has three primary components: the deliberate cultivation of unstructured time, the unwavering adherence to an inner scorecard, and the clarifying power of thinking on paper. The first component, unstructured time, is the most visible and yet the most radical aspect of Buffett's operating system. It is the boredom that we alluded to in the very beginning. In a world that glorifies the back-to-back meeting and the color-coded calendar, Buffett's schedule is a defiant statement of emptiness. This is not an accident. It is a core feature of the design. Neurologically, the human brain has two primary modes of thinking: the focused mode and the diffuse mode. The focused mode is what we engage in when we are actively concentrating on a task, like reading an annual report or working through a calculation. It is linear, analytical, and effortful. This is the mode Buffett uses when he is consuming his 500 pages. However, the focused mode is not where breakthrough insights typically occur. True synthesis, the connecting of disparate ideas to form a novel concept, happens in the diffuse mode. The diffuse mode is a more relaxed, resting state of mind. It is what happens when you go for a walk, take a shower, or simply stare out a window. In this mode, your brain is not focused on a single point but is free to wander, making connections between different regions and different sets of stored information. It is in these moments of mind-wandering that the idea from a history book might suddenly connect with a problem in a company's business model. It is the brain's background processing, the quiet work of the subconscious weaving the lattice work together. Buffett's empty schedule is an incubator for the diffuse mode. The long, uninterrupted hours he spends simply sitting and thinking are not passive. He is giving his brain the necessary downtime to process the immense volume of information he has consumed. He is allowing the synthesis to happen. The modern executive, running from meeting to meeting, is trapped in a perpetual state of focused mode. They are constantly reacting to the immediate demands of their environment. They have no time for the quiet, reflective thought that true synthesis requires. They are information-rich but insight-poor. They are collecting dots but never taking the time to connect them. Buffett's boredom is, in fact, a highly productive state of deep cognitive work. It is the crucible where information is transmuted into wisdom. He is not being lazy. He is deliberately creating the optimal neurological conditions for generating superior insights. He understands that the quality of his decisions is a direct function of the quality of his thinking, and the quality of his thinking is a direct function of the time he allocates to it. By defending his unstructured time with a ferocity that others reserve for their most important meetings, he is protecting the very core of his competitive advantage. This leads to the second, more psychological component of the synthesis engine, the unwavering adherence to an inner scorecard. Buffett often tells a story to illustrate this concept. The big question about how people behave is whether they've got an inner scorecard or an outer scorecard. It helps if you can be satisfied with an inner scorecard. An outer scorecard is a way of life where your sense of self-worth and the correctness of your actions are determined by external validation. What do other people think? Am I popular? Do my decisions align with the consensus view? The person governed by an outer scorecard is constantly looking over their shoulder, seeking approval and avoiding criticism. They are a ship without a rudder, tossed about by the changing winds of public opinion. The inner scorecard, in contrast, is a state where your own well-reasoned, internal metrics are the sole judge of your success. It is the ability to come to a conclusion based on your own analysis and to stick with that conclusion even if the entire world is telling you that you are wrong. This is not mere stubbornness. It is a deep-seated intellectual integrity born from a confidence in your own thought process. This distinction is absolutely critical for the synthesis of information. A mind governed by an outer scorecard cannot think clearly. When it processes information, it is constantly asking, what is the popular opinion on this? What will my peers think if I come to a contrarian conclusion? This external noise pollutes the entire cognitive process. The goal shifts from finding the truth to finding a socially acceptable version of the truth. Such a mind can never generate a truly original or superior insight because it is shackled to the consensus. Buffett's entire learning machine is designed to serve his inner scorecard. He reads not to be able to participate in a cocktail party conversation about the latest market trends, but to build his own internal model of reality. He thinks in solitude not because he is antisocial, but because he needs to hear his own thoughts without the contamination of outside opinion. This is what allows him to be greedy when others are fearful, and fearful when others are greedy. His emotional state is not tied to the market's mood, but to his own assessment of value versus price. When he bought a massive stake in American Express in the 1960s after the salad oil scandal, the consensus view was that the company was doomed. The outer scorecard screamed, "Sell!" But Buffett had done the work. He had gone to restaurants and talked to merchants. He had studied the company's underlying business of travelers' checks and credit cards. His own analysis, his inner scorecard, told him that the market's fear was irrational and the company's fundamental earning power was intact. He made a fortune because his synthesis of the facts was not distorted by the panic of the crowd. Cultivating this inner scorecard is perhaps the most difficult part of emulating the Buffett model. It requires a form of psychological courage. It is the courage to be alone in your convictions, to look foolish in the short term, to accept the criticism and doubt of others, all while trusting in the rigor of your own intellectual process. Without this psychological foundation, even the most brilliant synthesis of information will crumble at the first sign of social pressure. The third component of the synthesis engine is the clarifying power of thinking on paper. Buffett is famous for the clarity of his writing, particularly in his annual letters to Berkshire Hathaway shareholders. These letters are models of clear, logical, and unpretentious prose, but it is a mistake to view them merely as a tool for communication. For Buffett, writing is a tool for Tumstra thinking. The act of translating a complex set of thoughts into clear written sentences is one of the most powerful methods for refining and testing those thoughts. An idea that seems brilliant inside your own head can often evaporate into a cloud of incoherence when you are forced to articulate it on paper. The page is an unforgiving mirror. It exposes fuzzy logic, hidden assumptions, and gaps in your understanding. It forces you to organize your thoughts into a coherent, linear argument. When Buffett sits down to write his annual letter, he is not simply reporting on the year's results. He is engaging in the final and most rigorous stage of his synthesis process. He is taking the latticework of ideas he has built through reading and thinking and forcing it into a structured, logical narrative. In explaining his reasoning for a particular investment, he has to lay out the premises, show the evidence, and build the case, step by step. This process inevitably reveals any weaknesses in his own thinking. It is a form of self-interrogation. Why did we really buy this company? Is the competitive advantage as durable as I think it is? What are the biggest risks that I might be underestimating? If he cannot explain his reasoning in simple, clear language that a layman can understand, it is a red flag that he may not understand it as well as he thinks he does. Albert Einstein is often quoted as having said, "If you can't explain it simply, you don't understand it well enough." This is the principle that guides Buffett's writing, and, by extension, his thinking. The clarity of the prose is a direct reflection of the clarity of the thought. By committing to this annual act of public reasoning, he forces a level of intellectual discipline and honesty upon himself that is exceedingly rare. This triad, unstructured time for the diffuse mode to operate, an inner scorecard for psychological independence, and thinking on paper for logical rigor, forms the synthesis engine. It is the process that takes the raw ore of information from his reading and forges it into the steel of unshakable conviction. It is what allows him to move from a state of, "I have read a lot about this," to a state of, "I know this." This deep, synthesized understanding is the final output of his learning machine. It is the precursor to the rare and decisive moments of action that have defined his career. The world sees the action, the multi-billion-dollar investment, but it is the thousands of hours of quiet, unseen work done by this synthesis engine that makes that action not just possible, but rational and, in hindsight, almost inevitable. Part 4. The output. From insight to decisive action. The entire cognitive apparatus we have deconstructed, the fortress against the action bias, the relentless learning machine, the powerful synthesis engine, is all designed to serve a single, ultimate purpose: to generate the conviction necessary to act with decisive force when a truly extraordinary opportunity presents itself. The output of the Buffett operating system is not a constant stream of good ideas. It is a deep, patient, and highly selective process that culminates in rare, high-consequence actions. This output phase is governed by two final, critical principles: the fat pitch philosophy and the ultimate weaponization of temperament. The fat pitch principle is the operational manifestation of Buffett's no cold strike game. It is the understanding that in the world of investing, a few great decisions can do the work of a lifetime. The goal is not to have a portfolio of 100 decent ideas, The goal is to identify a handful of truly magnificent opportunities over the course of an investment career and to bet heavily on them. Buffett has said, "I could improve your ultimate financial welfare by giving you a ticket with only 20 slots in it, so that you had 20 punches, representing all the investment decisions you got to make in a lifetime. And once you'd punched through the card, you couldn't make any more decisions. Under those rules, you'd think very carefully about what you did, and you'd be forced to load up on what you'd really thought about. So you'd do much better." This punch card mentality is the antithesis of the modern financial world's obsession with diversification and constant portfolio rebalancing. Buffett's approach is one of radical concentration. When he finds a fat pitch, an opportunity that lies squarely in his circle of competence, that is protected by a durable economic moat, and that is available at a significant discount to its intrinsic value, a margin of safety, he does not take a small, tentative position. He bets big. The investments that have truly defined his legacy, American Express, the Washington Post, Coca-Cola, Apple, were not small, diversified bets. They were massive, concentrated positions that he took only after years of patient study and with an overwhelming degree of conviction. This is why the learning machine is so critical. The only way to have the confidence to make such concentrated bets is to have a level of understanding that borders on certainty. The thousands of hours of reading, the quiet contemplation, the rigorous synthesis, all of this is the work required to earn the right to make a 20-punch decision. The average investor, operating with a superficial level of knowledge and driven by the action bias, is forced to diversify widely. Their diversification is not a strategy, it is an admission of ignorance. They spread their bets because they don't have a deep enough understanding of any single one to justify a large position. Buffett's concentration is the ultimate expression of his knowledge. It is the logical endpoint of an operating system designed to produce a few high-quality insights rather than many low-quality ones. The system is not designed for activity. It is designed for near certainty. The years of apparent inaction are the price of admission for the moments of decisive, world-changing action. This brings us to the final and perhaps most important output of the entire system: temperament. Buffett has famously stated, "The most important quality for an investor is temperament, not intellect." This is a profound statement. He is saying that once you have a reasonable level of intelligence, the marginal gains from being smarter are very small. The real differentiator, the thing that separates the good from the great, is psychological fortitude. Temperament is the ability to maintain your emotional equilibrium, to think rationally and adhere to your system in the face of extreme pressure. It is the ability to remain disciplined when the crowd is succumbing to either fear or greed, and this is the ultimate product of his cognitive operating system. The unshakable temperament Buffett is famous for is not an innate personality trait. It is a forged and manufactured quality. It is the direct result of his entire process. His ability to be, quote, greedy when others are fearful during a market crash is not a display of machismo or reckless courage. It is the logical and unemotional execution of a plan based on a deep, synthesized understanding. When the market panics and sells off a company like Coca-Cola to a fraction of its intrinsic value, Buffett does not feel fear. He feels excitement. Why? Because his thousands of hours of study have given him a clear picture of the company's durable competitive advantage, its global brand power, and its long-term earning potential. He has built such a robust mental model of the business that the short-term fluctuations of its stock price, the Mr. Market phenomenon he so famously described, are nothing more than an opportunity to buy more of a wonderful business at a silly price. His conviction is not an emotion. It is a conclusion. It is the output of his learning machine. Similarly, his ability to be fearful when others are greedy during a speculative bubble is not a sign of timidness. It is the disciplined refusal to play a game he cannot win. When prices become disconnected from underlying value, when new paradigms are invoked to justify absurd valuations, his latticework of mental models, built from history and business fundamentals, flashes a giant warning sign. He is not tempted to join the party because his inner scorecard is not influenced by the euphoria of the crowd. He is content to sit on the sidelines, even if it means underperforming in the short term and looking like a fossil, because his process tells him that the risk of permanent capital loss is unacceptably high. This temperament, this emotional discipline, is his ultimate moat. Many people can learn to analyze a balance sheet. Many people can read the same books and annual reports. But very few can build the complete cognitive and psychological system required to act on that knowledge with unwavering discipline over a period of many decades. The system protects him from others, but most importantly, it protects him from himself. It is a defense against the primal glitches, the action bias, the herd instinct, the siren song of fear and greed that reside within us all. His entire life's work has been the construction of this internal fortress. The blueprint he has given us is not a get-rich-quick scheme. It is a manual for a lifelong project, the deliberate and systematic construction of a superior mind. A mind that is not just knowledgeable, but wise. A mind that is not just active, but effective. A mind that replaces the chaos of reaction with the calm clarity of deep understanding. This entire learning machine, this billion-dollar mind, is ultimately an engine for generating one thing: superior insight into where capital should be placed for the highest long-term return. But generating that insight is only half the battle. The other half is having a ruthlessly efficient operational system to deploy that capital at scale. This is the science of capital allocation, the very engine that took the insights from Buffett's mind and used them to construct the Berkshire Hathaway empire. To understand how he translates thought into empire, you must deconstruct his model for capital allocation, the cognitive operating system he uses to decide whether to reinvest profits back into a business, buy another company entirely, or repurchase his own stock. It is the practical application of all this accumulated wisdom, and that is the subject of the video on your screen right now. Click it and continue the deconstruction.